Hello fellow traders, welcome to Trading Truth, a place where you find the truth behind profitable traders. Today we're going to see what is Forex. What is Forex? It's quite simple. It's a global financial market that allows one to trade currencies. If you think one currency will be stronger versus the other and you end up correct, then you can make a profit. Once upon a time, before global pandemic happens, obviously COVID-19, people would actually get on aeroplanes and travel internationally. If you have ever traveled to another country, you usually have to find a currency exchange booth at the airport and then exchange the money you have in your wallet into the currency of the country you are visiting. Okay? You go up to the counter and notice a screen displaying different exchange rates for different currencies. An exchange rate is the relative price of two currencies from two different countries. You find Japanese yen and think to yourself, wow, my $1 is worth 100 yen and I have $10. I'm going to be rich. When you do this, you essentially participate in the Forex market. You have exchanged one currency for another. Or in the Forex trading terms, assuming you're an American visiting Japan, you have sold dollar and bought yen. Before you fly back to home, you stop to the currency exchange booth to exchange the yen that you miraculously have remaining. Tokyo is expensive, you know that. And notice the exchange rate has changed. It's these changes in the exchange rate that allows you to make money in the foreign exchange market. What is Forex? The foreign exchange market is usually known as Forex or FX. It is the largest financial market in the world. It's an important point, okay? If Forex market is a global, it is a global market. It is a decentralized market where the world's currencies change hands. Exchange rates changes by second, so that the market is in a constant flux. Okay, it fluctuates constantly. Only a tiny percent of currency transaction happen in the real economy, involving international trades and tourism, like the airport example above. Instead, most of the currency transactions that occur in the global foreign exchange market are bought and sold for speculative purposes. Okay, currency traders, also known as speculators or currency speculators, okay, buy currencies hoping that they will be able to sell them with a higher price in the future. Compared to the 22.4 billion per day volume of the New York Stock Exchange (NYSE), the foreign exchange market looks absolutely ginormous with the 6.6 trillion a day volume. Okay, a day traded volume. That's a trillion with a T. Okay. Let's take a moment to put this into a perspective using a monster. The largest stock market in the world, the New York Stock Exchange, which is also known as NYSE, trades a volume of about 22.4 billion each day. Okay, if we use a monster to represent the NYSE, it would probably look like this. Look, it looks really intimidating. Works out, and it works out, and some may even find it sexier. Who knows? Some people love monsters. So you hear about the NYSE in the CNBC, Bloomberg, BBC, heck, a lot of places. Even in your local gym, the NYSE is up today, blah 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 blah. Everyone shouts at that, okay? When people talk about the market, they usually mean the stock market. Okay, the NYSE sounds big, it's loud, and like it makes a lot of noise. But if you actually compare it with the Forex market, it would look like this. Oh, the NYSE looks puny compared to the Forex market. It doesn't stand a chance. Okay. Check out the graph of the average daily traded volume for the Forex market, New York Stock Exchange market, Tokyo Stock Exchange market, and the London Stock Exchange market. The currency market is over 200 times bigger. It is huge, but hold your horses, okay? There's a catch over here. That huge 6.6 trillion number covers the entire global foreign exchange market, but the spot market, which is the part of the currency market that relevant to most forex traders is pretty much smaller than that. Okay, it is about 2 trillion per day. And then if you just want to count the daily traded volume for retail traders, that's us. Okay, it's even smaller. It is very difficult to determine the exact size of the retail segment of the forex market, but it is essential to be around it is estimated to be around 3 to 5% of the overall daily forex traded volume, or around 200 to 300 billion, probably less. Okay, so you see, the forex market is definitely huge, but not as huge as others would like to believe. Okay, don't believe the forex that the forex is a 6.6 trillion market hype. The huge number sounds impressive, but it's a bit it's just a bit misleading. Okay, we don't like to exaggerate things. We just keep it the way it is. Just see the things the way it is. Aside from the size, the market is also rarely closes. Okay, it's open virtually round the clock. The forex market is open 24 hours a day and 5 days a week. Only closes during the weekends. So unlike the stock or bond market, the forex market does not close at the end of each business days. Instead, trading just shifts from different financial centers around the world. Actually, the day starts when the traders wake up in the Wellington, then moves to the Sydney, then moves to the Singapore, then to the Hong Kong, then to the Tokyo, then to the London, and finally to the New York, before starts all over again in the New Zealand. Okay, hope you learned something new today. Give this video a thumbs up or thumbs down, whatever you like. Leave your thoughts in the comment section below. I love to read it. And don't forget to subscribe if you are new to this channel, and press the bell icon so that you get notified whenever I post a new video. And finally, do it the right way or don't do it. Thank you.